Hello, traders. This is Michael and Paul coming to you from GammaEdge on Sunday, February 27th. We're going to do a quick review of the week, the eventful week we had. We're going to look forward to the SPX for the upcoming week to give you an idea where we possibly anticipate the market to move. We're going to look at the cumulative tick and how that could have helped us for Thursday, Friday trading. And then we're also going to look at some technical analysis overlaid on the SPY relative to the tick also. So thanks for joining us, and go ahead and take it away, Paul.
Yeah, thanks, Mike. So I think, the key takeaway for the week was we started off fairly bearish, and this is the cumulative tick using what we call the trash can US composite. Downward slope all week. Institutionals, or the large boys and girls, were selling constantly. You can see here on Thursday, superimposed with the SPX here, you can see that we bottomed, and then after about 2 o'clock or so, we started taking off, and you can see the response in the SPX. Friday was good. We talked about a continuation pattern, and we actually saw that going up. And so we see some buying here in the afternoon from the institutional side of the filtered cumulative tick, and then at about 10:30 or so on Friday, we had just steady buying, areas of plateaus, of course, but the lower left, upper right type of behavior. We call this a linear up, and this is a get on the train signal. If you're not getting longer as this goes higher, you're probably going to miss out some gains. So I think a key takeaway for this was, we saw the continuation. We talked about it in our morning video Friday morning, what we were looking for, and it materialized. It's really that simple. I'm going to flip over now to where are we headed kind of for the overall week. This is the SPX. This is updated as of the data that we have here Sunday afternoon. We'll get another update tomorrow morning. I think the takeaway is, as you can see above us, there's not a lot of definition in positive gamma. Overall, we're in a net negative gamma condition right now, and it's still fairly deep. So we're not out of this yet. I think that's important to understand that this is kind of a fragile recovery right now. We're only in day 2 or day 1.5, and we've got quite a ways to get out of this before we can really flip over to a lower volatility environment. A key thing to take away here is that the upside targets right now are 4,600. The downside targets are 4,200. So those define what we call the goalposts, and that's a big deal just in context of where we could expect the price to move. It can absolutely go outside of those, but just be aware those are the goalposts. When we take a look at Monday being a 0 DTE, one of the things that we see here is that it's actually not a well-defined DTE. We're going to show you some other data here on the SPY from Friday for the DTE, 0 DTE, and you'll see a very different picture than what you see here. This is very sporadic on Monday. It does point to 4,400 being one of our upside levels. If we go above this, these calls will be in the money, and that actually, as those are monetized, or if they are monetized, that could put some downside pressure on it. When we close calls, the dealer response is to actually sell the underlying. And if we drop down below these to 4,350, 4,325, or 4,300, we could actually see a monetization in these areas too, which actually would drive us back up. So we're going to get probably some swings or kind of a rudderless type of sailboat behavior on Monday. This is subject to update, but just be aware. One final picture that I want to show you before I turn it over to Michael is that this is the distribution of gamma above and below our current spot price. And why this is important is that we've got a significant amount of puts that are due to come off on Monday. Monday's the end of the quarter, so we may see some window dressing and things going on. If these puts are monetized, and if volatility continues to drop, that could actually fuel us to go higher. That's a big if, because you can see we've also got calls overhead, and these calls overhead when they are monetized, actually can cause the dealer response to drop. So you've got this tug of war going on within the SPX complex. It's going to be pretty interesting to see how it materializes. With that, I'll turn it over to Michael and take it away.
All right, sounds good. Thanks, Paul. So quickly, I'm just going to go ahead and look at the PBI, sorry, the Power BI charts that we had posted in the morning for SPY for in the room. So this was the morning post in the SPY channel. And obviously we can readily see that it was a negative net gamma still into the day on Friday. What we were looking at though was anticipation that we would continue higher. So obviously we have the overriding negative net gamma, but then we pulled a chart roughly at 11:57 in the morning on our data, and we had seen that the gamma had flipped to positive. So that gave us a kind of a tailwind and another anticipation expectation that price could actually move higher. Obviously, you see this 438 was a large area of interest in gamma that we would be looking at for price to move towards, and then possibly stall in that area as the calls would be monetized and profits would be taken into that area. We'll go ahead and go over to the technical analysis that we were looking at actually for Thursday and Friday. So you can rewind back and look at Paul's tick chart as we had this large gap down. I know a lot of people talk about buying the dip. You know, really there's no defined area when SPY gapped down that we were trying to trade against. So it's always better just to wait for the reaction, wait for the opening range. And once price rebounded and then started to basically flag in this kind of 415 to 419 area, then if you'll look at Paul's chart also, we saw that the tick actually started changing roughly around 1:30 to 2 o'clock. And once it started breaking above this price area, tick changed and became linear up, and then the accumulation, the buying also changed also, and just gave a significant turn in the market. So these are the areas that we want to watch, and these are the areas that we want to enter for trades, and then look for continuation up. And then roughly we hit that 437.84 was the high on Friday. So almost right to that 438 area where to be looking to take profits if you were an intermediate time trader, intermediate trend trader for 2 days there, kind of up into that gamma level. So again, I think it's just important. Everybody talks about buying the dip, but we need to have a defined risk plan. What we do at GammaEdge is we watch the tick to see if institutions are stepping in. Then we have the gamma levels that give us kind of some areas of interest that price may get attracted to, and then we use those to set up our trades and define the risk on that. So anything else on that, Paul?
Nope, nailed it.
Okay, great, sounds good. So thank you for joining us on Sunday. Go ahead and pause your player and you can review all those charts. Also, you can find us at GammaEdge.us or on Twitter. You can follow us there. Also, we have a YouTube channel, and we'd be happy for you to join us in the room and kind of see what we're doing, how we're expanding the environment and expanding the GammaEdge for traders to become successful. So thank you for joining us, and we hope to see you in the Discord, and we'll continue to post videos to explain our trading process. Thank you.
Thanks, everyone.